There are no secrets in this business that only the priesthood knows. All out there in black and white. It's a simple business. I took all the books out. I read them. And finally, when I was 11, I bought 3 shares of stock. And I didn't know. I was fascinated by the subject. My dad got elected to Congress, so now the library became even bigger. And I took all the books I could out of there on markets. And I used to chart and do all that sort of thing. And then finally, I read Graham's book when I was at the University of Nebraska, The Intelligent Investor, when I was 19, and that just changed my whole framework. But the advice I would give is to read everything in sight, and to start very young. It's a huge advantage in almost any field to start young. And if that's where your interest lies, and you start young and you read a lot, you're going to do well. I mean, there are no secrets in this business that only the priesthood knows. I mean, we do not go into temples and look at tablets that are only available to those who have passed earlier tests or anything. It's all out there in black and white. It's a simple business. I talked about reading the annual reports of Anheuser-Busch for 25 years, but I've read the reports of Coca-Cola and Gillette and all kinds of companies long before we invested in them. And if you enjoy the game, you'll find that playing bridge or playing baseball or whatever. And if you don't enjoy it, you probably won't do well on it. But I would advise you to start early, read everything in sight, look for the successful framework that's been successful for people. And there's nothing like Graham's, in my view. And you'll have a lot of fun, and you'll probably make a lot of money. Well, I was lucky. I had a sensational teacher in Ben Graham. And we had a course there. There's at least one fellow out in the audience here that attended with me. And just Ben made it terribly interesting. What we did was we walked into that class and we valued companies. And he had various little games he would play with us. Sometimes he would have us evaluate company A and company B with a whole bunch of figures, and then we would find out that A and B were the same company at different points in its history, for example. And there were a lot of little games he played to get us to think about what were the key variables and how could we go off the track. I remember one time Ben met with Charlie and me and about 9 or so other people down in San Diego in 1968 or so, and he gave all of us a little true-false test, and we all thought we were pretty smart, and we all flunked. But that was his way of teaching us that a smart man playing his own game and working at fooling you could do a pretty good job at it. But I would, if I were teaching a course on investments, there would be simply one valuation study after another with the students trying to identify the key variables in that particular business and evaluating how predictable they were first, because that is the first step. If something is not very predictable, forget it. You don't have to be right about every company. You have to make a few good decisions in your lifetime. But then when you find, the important thing is to know when you find one where you really do know the key variables, which ones are important, and you do think you've got a fix on them. Where we've done well, Charlie and I made a dozen or so very big decisions relative to net worth, but not as big as they should have been. And we've known we were right on those going in. I mean, they just weren't that complicated, and we knew we were focusing on the right variables and that they were dominant. And we knew that even though we couldn't take it out to 5 decimal places or anything like that, we knew that in a general way we were right about them. And that's what we looked for, the fat pitch. And that's what I would be trying to teach students to do. And I would not try to teach them to think they could do the impossible. Charlie?
Yes, if you're planning to teach business valuation, and what you hope to do is teach the way people teach real estate appraising. So you can take any company, and your students, after studying your course, will be able to give you an appraisal of that company, which will indicate really its future prospects compared to its market price. I think you're attempting the impossible.
Yeah, probably on the final exam, I would take an internet company And I would say the final exam, the question is, how much is this worth? And anybody that gave me an answer, I would flunk.
Right. Right.
Make grading papers easy, too.
So this time I went back 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward.
America's great cities.
You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And the day I bought, I mean, the headlines. The headlines were terrible every day. You know, within 2 months of this.
This is the New York Times from 1942 that day.
Yeah, the 1942 New York Times sold for 3 cents, and I also got the headlines from some days before, and everything was going badly. The Philippines were going to fall within 2 months. Things were grim in Europe. Our ships were being sunk, and the war was bad then. And that day that I bought, March 11th, the Dow Jones cracked 100 on the downside. There was a 2% decline, which would be 500 points today.
Wow, it's a bear market.
And the night before, on March 10th, I said to my dad, I want to go all in. I had $125, and I put every bit of it in 3 shares of City Service Preferred, and which is still my personality, is to shove it all in.
As we've seen with Apple.
Yeah, somewhat. And as I pointed out to the crowd, I bought that stock at 38 1/4. It was down from 84 the year before, and it was down from 55 in January. And I thought, I'm really buying it cheap. So it went down to 27 after I bought it. And then I did it, and it went up to 200 later on, but I sold at 40. The investor has a choice between 3 or 4 things. They've got stocks, they've got short-term governments, they've got long-term bonds or long-term governments, or they could buy a farm, a small farm, or
what about corporate bonds too?
Yeah, they can buy corporate bonds, but they probably don't know enough to evaluate credits. I mean, they will get enticed into junk bonds at exactly the wrong time. That's when the issuances will come, and the covenants will be non-existent, and so.
So you're talking about average investors who don't do this for their day jobs.
Not professional investors,
right.
but average investors. But 99% of people are non-professional investors, and that would, if they had to do that to come out decently, you can understand I'm sort of gambling on that. But the point is, you don't need to do it.
I got to buy some stock here. What do you offer to have?
You don't have to buy exactly the right stock or buy at exactly the right time. The one thing you have to avoid is buying the single wrong stock or at the single wrong time. And most people get excited about a stock or about the market after it's gone up. I mean, their neighbors made a lot of money, and they know they're smarter than their neighbor. It's very irritating to have a neighbor buy a new car, and your spouse says, "Is that guy smarter than you are, or what?" So they have this. They're enticed into the market at the wrong time, and all they really need to do is buy a cross section of America, and it's best to buy it over time. If the first 10 years of your working life you just save and invest for that period of time. You don't have to be the right time.
Just city services. You've talked about this. I knew that was your first purchase. I knew you were 11. But for people watching at home, you hear an 11-year-old picks out a stock and asks their dad to buy it, particularly when their father is a stockbroker. You assume their father is the one that led them to that conclusion. My guess is you did that all by yourself. How did you come up with it?
I must have heard somebody talk about it. But then if you looked at city service at that point, here was this company in the Depression, didn't have the money to pay it. Now all of a sudden it was paying down its debts, and it was going to earn a lot of money. And they had a lot of, they had assets that were becoming worth more. And we were going to have inflation after World War II, so that assets probably were going to be worth more while their debt was coming down. And the earnings on the preferred were terrific. They just weren't paying them out. So I was going to get $200 at some time, but the problem was that buying it at 38 and a quarter, as a matter of fact, and having it go down to 27, and walking to school with my sister, who also wanted to buy 3 shares because I was buying it. She hated to see me get rich while she wasn't getting rich, and having her point out that this thing was going down every day. When it got back up to 40, and we each had a chance to make a $5 profit, I thought, now my sister will again consider me a genius, and I will have $5 more. How could life be any better? So then I watched it go to 200 after selling it to 40.
Lessons learned early in life, probably very powerful ones.